getting another stream and getting some more education in, looking at new setups for the week. We got a lot today that we're going to go over. It's going to be a lot of TA that we're going to do today, just looking at different setups, different things, what's going on in the market. We're going to go over Bitcoin, ETH. We'll go over some GJ. We'll talk about liquidity, how it's important, how it can be a catalyst as well, as I believe anything can be in this market and in this game. We'll look at some metals, and then we'll talk about when and when not to be present within the markets, as far as time goes and as far as just in general with trading psychology. And then after that, we'll get into some USDJPY. We'll talk about this recent play that had just occurred this morning, how it happened, how it came to fruition, and how we can use our setup, our spots of analysis, and get that started. So let's just jump in now. We're going to jump into ETH, talk about what's going on. What are we looking for with ETH coming into the week, coming into the rest of the week, right, with the news that we are going to have, right? Just understanding that news is going to bring volatility within the market. It's going to bring larger moves in the market instead of trying to trade per se based off of the news. Yes, you can trade based off of the news, but I like to pair it with other confluences, like with everything. If one person just trades with just news, then I'm not looking to actually, right, partake in some type of entry like that or some type of play like that, because I'm not going to short or long something just based off of one confluence, right? This could be anything. If it's not just news, it could be an indicator, it could be somebody telling you to, it could be anything, right? But what I want to say about this and what I want to get started off with ETH, right, is we always do our time frame from our top down analysis, and I do this every single stream. We're going to do this every time we hop into these streams, but we'll do our top down analysis, right? Understand where our structural narrative is from the higher time frames to the lower time frames, be able to decipher that way, and that way we can get a structural narrative or an understanding as to where price can possibly deliver to the next goal, right? So on our weekly time frame, actually, let's just start on the monthly to make this simple, right? Obviously, we had a break of structure, downside area of supply that was created from that move to the downside, right? Your candle before that displacement candle to the downside, large monthly area of supply that we could look for price to possibly trade back into, right? Going back on the weekly, now from the monthly to the weekly, we can see that price came down, rated these lows, right? Rated this liquidity. We saw a large move. Following that, we have imbalance on this move to the upside right here. We created a high, a low, and then we traded higher. We have some type of weekly possible break of structure, right? We need to confirm that with a higher low within these areas. If the daily can create a higher low and continue higher, but just understanding that this could be more of a liquidity rate, right? And then continuation to the downside versus a break of structure, because we need to still form that higher low to continue higher, right? Will help us with our analysis and help us to understand our structural narrative. So now from the weekly, right, to the daily, understanding where we were trading up into this price range. I have an area of supply from this drop-based drop that had occurred right here that we have yet to actually mitigate, as well as creation of buy-side liquidity, right? On this move to the downside, we saw the push to the downside, break of structure to the upside. After the break of structure occurred, we created a higher low, traded higher into the range. If I'm drawing out my range, right, from my external high to my external low, you can see that we started to trade up into premium of this range. As we were doing that, right, we were manipulating highs, leaving those lows, mitigating areas of demand, liquidating those lows, moving higher, right, creating higher highs, higher lows, higher highs, higher lows. And then once we came up into this area of supply and rated these highs, you can see the relative equal highs that we had formed right here. This buy side liquidity, early shorts or late shorts getting into trades over here, setting their stop losses over these highs, not believing that price will move over these highs and continue to the downside. Once that happens, liquidity is opened up within the market, and then we see price trade lower. After algorithms enter, right, let's go on the lower time frames and look at what happened when we came up into those areas, right, mitigated this area of supply and took the early shorts out of their trades, that buy side liquidity. Once that happened, right, we started to see a pullback, creation of buy side liquidity on this move down. Starting to trade lower, let's draw our daily range now from our most recent available area of demand, right, from a move to the upside, break of structure to the upside. Where did this occur? Where can we look to possibly take this trade? Now, We saw the introduction of demand right here, right? We had our liquidation rate to the downside after this break of structure to the upside here, and then we saw price trade higher. Where was our next area, right? If we were to go on higher time frames from the weekly, we can even look at the 2-day chart, right, to get a better understanding of where price could possibly trade into. We have an area of imbalance that brought us out of this range, right, as well as these clean highs and lows created on this move up, and then we saw price trade lower. We have a next area of supply from this break of structure to the downside, right? Our candle before that candle that was created. So there's two things that we want to look for here. One, if this was more of an accumulation scenario, right? A reaccumulation scenario, we would look for a distribution to then accumulation, right? Manipulating the lows into areas of discount that brought that first initial break of structure to the upside, right? Introduce demand with areas of imbalance lower. And after that is created, and if we accumulate lower, manipulate lows, remember, leaving the highs as we are coming down, leaving that buy side liquidity, then we can look for trades higher into the range. Right now, that structural narrative is still showing bearish overall, as we have shown this large break of structure to the downside here, have an area of displacement, right? We're on our 2-day and even our daily chart from this displacement candle to the downside. There are two things we want to look for here, right? If price trades up higher into this area of supply, does not manipulate the lows, continues to manipulate highs and leave lows, right? And then break structure to the downside on then a 4-hour. Once we come up into this area, if I'm looking at the 4-hour now, yes, it's starting to show some bullish structure. So if we trade back up into this area of supply, roughly 1818, right, and start to show that 4-hour bearish narrative to follow with the daily narrative, right, then we can start to look for trades to the downside into areas of liquidity, into areas below that have actually sponsored this move to the upside right here. Yes, this is ranging. We are still ranging. Very, very annoying range. Very, very annoying chop. It's probably going to be like this still coming into September, maybe even into late September. But this tells us that we are building up for a very, very, very large move, whether this is accumulation or distribution. I personally do believe this is more of an accumulation, as we are actually taking a lot longer to build this structural range, and we have shown more manipulation of lows within these areas, creations of demand, move away, right? Those moves away from that demand, and then from that we are starting to now create that buy side liquidity on these pulls back. But remember, overall, we are still showing that bearish structure. We would like this to be accumulation, right? But this could be leaning more to that distribution, as we are bearish overall, and as our bearish structural narrative is showing that same exact story. So from Bitcoin to ETH, from ETH to Bitcoin now. Very, very similar. I was actually looking at a daily chart when we were looking at this. I had this alert set at these lows, these daily lows that we have created right here. Bitcoin's initial move, right, came from this liquidation rate to the downside right here. Break a structure to the upside. We created a higher low, moved higher, created another higher low, moved higher, and then we showed that structural range break from this move to the upside right here. So we had that introduction, right, within this area right here, this institutional candle from this move to the upside right here. I was looking at this area at 20,000 to possibly look to take longs to the upside if we create buy side liquidity and manipulate lows right here, and not trade higher or trade into areas higher, right, of supply, and leave those lows as we are manipulating highs, because then I will be looking for more of a displacement to the downside, creation of supply, and then we can take price lower to that overall monthly equal lows that we have formed right here from our monthly bearish narrative at 17.5k. Yes, that's what it was. Okay. Very, very similar story. Bitcoin actually does look a lot worse, in my opinion, than ETH does as far as where we are in the range. But obviously, right, we'll just follow the structural narrative. If we manipulate lows coming into these areas of demand, taking out this sell side liquidity, taking out all those early longs, trying to get into trades, and then break structure upside with displacement, then we'll look for a move higher into areas out of the range right here, as this will be a continuation from that break of structure to the upside, higher low formation, and continuation higher. Let's get rid of this now. And from that, little Bitcoin and ETH sentiment, right now, currently, if we look within our range, actually, let's just do quick little understanding for Bitcoin. Super, super, super choppy, but 4 hours starting to show some type of bullish structure. So we could see a possible pullback into areas higher, but this could also be an accumulation to distribution following that higher time frame distribution that we had occurred right here. If we were to see that, then we would look for the manipulation of lows into the manipulation of highs, leaving those lows. We would want to see the highs taken out, all that buy side liquidity taken out. Then we would look for the break of structure in the area of supply to take that off of. And then we can take that lower to the downside if that were to occur. We'll get rid of this. We're going to go to GJ and we're going to talk about this play that occurred today. It actually came back into break even, stopped me at a break even after this ended. Was able to book 3% on the port, and we'll tell you how this happened, why this came into fruition. We talked about time and price on our last one as well, and then we'll talk about how we can apply that right to the same exact scenario. So if I were to group all of this TA in real quick, so I'm just going to take all of this. We'll make it a folder, then we will hide the folder. Alright, so understanding this, and we'll bring this back to replay mode to look at where we were at this point in time. We'll look at our higher time frame range to our lower time frame range. So we can see this is a very choppy range that we have been in for GJ, right? Something that hasn't shown a lot of structural moves, a lot of breaks of structures, a lot of impulse, right, out of the range. We've just been trading back and forth, grabbing buy side and sell side liquidity throughout this range. But we'll show you, and I'll show you right now, how this structural narrative, right, how our rules, our 1, 2, 3 steps of rules are going to set up every single time, no matter what chart you're playing in, right? What chart, what asset you are looking at, this setup, the structural narrative will occur every single time as prices fractal from higher time frames to lower time frames. So how this actually occurred, right? This was done from an hourly perspective. At this point in time, we had a 4-hour move up into the range, right? We mitigated supply, so we had our first break of structure to the upside right here. We came down, formed a possible higher low. We haven't had the full break of structure yet from this high being taken out and the continuation, that introduction of demand. But we formed a low right here, introduced more demand when we broke internal structure to the upside, still respected supply from this internal high that caused this internal low right here. And now we are understanding our range right now. So at this point in time, right, I had an area of demand. From this move to the upside, from our first break of structure here after a liquidity raid, second break of structure, introduction of demand, looking for a price to trade into this demand. So my structural narrative, right, is actually bullish overall. If we can trade into this area, show a break of structure, right, with impulse, then I will look to take it higher overall from us starting to break structure, starting to continuously show that demand, and starting to respect that. But we need to understand our structural narrative as well as where we can look to take this. So we have our area of interest, right, our point of interest that we want to price to trade into, right, to look to take this to the upside overall. Now, how are we going to get there, right? Let's look at what price is doing right now. Well, as we are looking at our structural narrative, as we are coming down, to make this as simple as possible, right, we created a lower low, a lower high, a lower low, a lower high, another lower low, right? More areas of supply from a liquidation rate to the upside, break a structure to the downside with displacement, right? And we're looking for the next lower high and the continuation into this area of demand, right? So let's go ahead and look what happens here. From our displacement candle, right, our break of structure to the downside with displacement right here, candle before that, candle that had occurred after the liquidity rate to the upside, mitigation of supply here came from this move right here. So if we draw this out, we can see that that supply is unmitigated. We're looking for price to trade into that to look to take this possibly lower. So let's play this out. Let's look at our time as well. Midnight is going to hit at about right here. So let's actually draw that out. And then we will look for our price note. So we will look to tag this when that midnight hits for the opening price. All right, so midnight opens up right here. We can go to the 5-minute. And then we'll draw out our price note. We are looking for price to trade opposite of our structural narrative. So we want to see a push to the upside, liquidation rate to the upside, and then a move lower. And then we'll look for the same thing at 8:30 once that happens. So first we have that midnight price tag. And let's watch what price does here. Starts to trade lower into that area of demand. So let me not play that out. Let's bring this back. Apologies. But we start to trade lower into that area of demand. And this is where I got very interested, because let's watch what price does as we trade into this area of demand. So I'm going to play this candle by candle, and then as we go lower and tap that area of demand and then move higher, this to me is more of inducement, right? Maybe we tap down into this area and opened up limit orders, right? That we're trying to open up trades on this demand area right here. Because we have to understand, right? And especially with Forex, that $6.6 to $7 trillion, right, is traded throughout a day. So there are millions and billions of people looking at this same exact thing, looking at these same exact areas, trying to get into these trades, right? So that's why, as an institutional trader, as somebody with that mindset of I'm going to trade like the hedge fund, that's why we wait for the liquidation rate of those lows after we see these areas mitigated, because we'll see price come up and mitigate those areas, right? Up or down, right? Demand or supply. They will mitigate those areas, open up liquidity within the market. So limit orders that said I want to short this to the downside opened up right here, right? Whatever it was. If they're on the lower time frames, on the 15-minute, they saw this break to the downside right here. After this was open, we're waiting for the manipulation and then break of structure, right? Where's the manipulation? Where is the liquidity opened up within this market, right? We see price trade up into the supply, and then we see the raid, and then the move occurs. So after all the early shorts are out, then the move occurs. So this is why I'm not worried about catching that initial move, that initial push into any of these areas of supply or demand, because I'm looking for the introduction versus catching this top right here, right? Because now I have the ability to wait for price to trade up into this, show that manipulation, show the break of structure downside, because now I have an area of supply to look to trade off of if price comes up into that area. What does it do, right? We move lower, early shorts, early shorts, early shorts, early shorts. What happens? They get taken out of their trades. Now everyone's like long, 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 right? Trying to take this higher to the upside. Maybe they see this as a breakout of some type of downtrend, whatever it is, right? Demand zone right here. They're like higher high, higher low, continuation to the upside, right? But we're looking at the structural narrative. We came up into this area, mitigated this area of supply, took out the early sellers, broke structure downside, introduced supply, right? And then we traded back into that area of supply after we took out more early sellers and then traded lower overall. So let's just get rid of all of this. And we'll go back to where we are right now. So that same exact theory, right? We come into this area of demand. We tap it off, barely tap into that area of demand, and then we see this large impulsive move to the upside following. Now, if I'm looking at this, right, looking at my area of unmitigated supply, looking at my early shorts, getting into trades, did we see that push up before our structural narrative came into play for that midnight price? Yes, we did. Price pushed up into this area of supply. Now it traded lower for the 830. We want to see price push up again and raid highs. So let's go ahead and play this out now. Let's mark out 830 once that hits. Right there. So we'll play this to that point in time. All right, so we have our 830 candle now that is being put in place, so we can go ahead and put down that price note now. So from now that 830 to 1130, that New York kill zone, right? I'm looking at that 930 as well for the volatility to come into play, for the volatility to come into the market at that 930 mark. So let's go ahead and draw out now that 930 mark. All right, and then the end of our kill zone is going to occur at the 1130 time. All right, now let's watch what price does, right, on the lower time frames as we're coming into these areas of supply. So we wanted to see the manipulation to the upside, right, following our 830 price, as well as the mitigation of supply. If we receive a break of structure downside with displacement, we can look to take this trade to the downside. So let's watch what happens. We start to trade higher into that area of supply. Let's go ahead and bring this back a little bit, try to slow this down. Put this on this. Play this out. Watch what happens as we trade up into that area of supply, right? We trade into that area, take out all the early shorts that had occurred. Where's my weak low, right? From my lower high, lower low, lower high, lower low, right? Am I going to create now the lower high and the lower low, the continuation to the downside, right? To take out that weak low and then mitigate areas of supply, maybe even liquidate these lows, continue to the upside and create demand, right? Because this move very healthy? This push to the upside, is this very healthy? What were we doing this entire time? No, we are just manipulating highs, right? Manipulating highs, leaving those lows, leaving those early longs, late longs getting into trades, trying to take this to the upside because they see breakout, 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 trendline breakout, right? They look at this and say price has been trading within this price action for who knows how long, right? And so they're like, breakout to the upside, I'm going to start to long this, take this to the upside, put my stops underneath these lows right here. It's going to continue to go to the upside, right? Whatever it is. However, they're going to try to take this to the upside, whatever their narrative is, right? But we're watching what happens here. That 930 price hits, right? What happens at 930? We see that algorithmic delivery of price up into that area of supply. And then I have that fair value gap setup that is set up, right? We have that break of structure downside, 1, 2, 3 candles, break of structure to the downside right here, that area of fair value is given, trade is given as well. Then targeting that first liquidity structural narrative, which was right here, right? And then your second overall over this high. We'll talk about when stops went break even as well. And then your second overall is going to hold right at that weak low to the downside right here. Now, we saw that delivery up into that area of price. We saw the timing as it was occurring. It is within our kill zone, right? Everything is setting up to where we want to take this trade at this point in time. So let's watch this. Let's watch this now as we come and trade up into these areas, and then we'll look for the break of structure to the downside, because this is where it gets important. Once I am tapped in, and once that next lower low is created on my lower time frames, then I am able to decrease my risk much by a lot, much quicker. So let's bring this back up. Back into the fair value gap. Let's watch the delivery up into that area of fair value. We trade up into that. We get that break of structure downside. I now have the ability, right, to decrease my risk up into these 1 minute candles right here. Waiting for now price to deliver into these areas lower. We wait for the delivery into these liquidity targets here. We get that delivery, so our first take profit is out. And then at this point in time, I do believe I ended up getting stopped at break even, right? But with this trade, I believe it was a 2-to-1, 3-to-1 with the first stop loss that was in play. But directly after, right, we're sitting at a nice 12-to-1. But noticing these trades that come into fruition every single day, right? With that price delivery, with that price target, with that time in price, right? We saw price manipulated to the upside here, manipulated to the upside here, opposite of our narrative, which was downside. And then we saw that play that was given to us from the algorithmic entry of price, right? That footprint, that displacement candle to the downside that screams price is going to a certain way. We are able to get into our trade, and then we are able to deliver to a structural narrative. So understanding that these happen everywhere, right? Every single day, and on lower time frames to higher time frames, right? I don't need to catch these super higher time frame moves to book 3.3% on my port for the week, right? As this one funded trader told me, he told me that it was tough for him, right? He told me it was difficult, but he told me this. He said 2.5% a week. That's all you need. He said that is realistically all you need. If you have a $200,000 FTMO account, 2.5% a week is 10% a month, right? 80% of that, you're cashing roughly $16,000 to $17,000 a month. Anyone, right, with the ability to make 2.5% a week can have the ability to make that money yearly, right? in this, right, booking 3.3% in a day, right? With the ability to wait for our structural narratives to come into play, we can have these situations to where I didn't catch a giant move, right? Caught maybe, what was this? Roughly 72 pips or so, right? Wasn't a huge move. To the downside, it was not a huge move. I didn't catch, right, some higher time frame push to the upside. I didn't catch this imbalance on this move to the upside. I didn't catch this move to the upside. It was a small move that if we look on the daily chart, right, we can't even see that play set up. Right? I can't even see this play set up. If I look on a 12-hour chart, it's within this candle, right? It's within this 12-hour candle that has a wick to the upside and a wick to the downside. These plays are able to be shown, right? They are shown every single day with this structural narrative if we can understand the price delivery, right, to the liquidity structural narrative that we have in play. So that was that GJ play, kind of how I want to show you guys. It's literally the same thing, right? There's not too much to it. There's no bells and whistles that I'm going to be sitting here and telling you guys, right? This is new, look at this, look at this. It's the same thing. It's going to be boring, it's going to be repetitive, and it's going to be over and over and over again. But that's what we want to be able to create us, right? That job type of scenario, that job type of feeling when we come to the charts at a certain time every day, look for the same thing every day, look for the same behavior, and then are able to enter our trades and exit them with ease, right? With comfortability. Because now that I set my stops to break even, I can walk away from my trade, know that my first take profit is going to be hit or not, right? And what I mean by or not is if I come back and I'm stopped out at break even, or I'm stopped out at or stopped out in general, right? I'll know exactly why this went wrong. I'll say, okay, maybe there was a demand candle or something down here, right? That price traded into after we tapped into this area. And the delivery of the structural narrative, if I wanted to take it all the way down here and I didn't have that feasible take profit with these areas or with this structural liquidity within our internal range, right? If I did not have this feasible take profit and I said I wanted to take it down here and then we end up playing it out, right? If we go back to the 1 hour, we end up playing it out and it comes back up into those areas and stops you out at break even, right? Then you're like, well, what just happened? Why was I wrong? Right? Because we need to understand our structural narrative overall. This isn't fully feasible, right, until it is given, until more supply is created on lower time frames after an hourly breaker structure to the downside. So now you need your 15-minute, right, with displacement into these areas of supply as we are coming into these areas, which does look like we are starting to show that possibly I would want to see a little bit more displacement to take this to the downside for a possible re-entry into these areas of demand. If that occurs, right, then we will look to take this to the downside into these areas of demand, look to take it to the upside after we mitigate those areas of demand, accumulate, manipulate lows, leave those highs, and then break structure. But this is that same setup, same structural narrative, same feeling, same thing I'm looking at, same behavior every single time, every single trade, every single day that I'm going to the charts, right? There's nothing new to it. It is just sitting down and honing it in. Now that we have those tools, right? Now that we understand how price is going to deliver within a certain structural narrative, then we can enter and exit trades with ease. And it can become our job, right? If we are managing risk, then we will easily succeed. So with that being said, that was GJ. We can go ahead and go to UJ as well. Right, very, very similar scenario. We'll go to the higher time frames. If we're looking at a daily chart, right, we had our range that we had drawn from this low to this high right here, and our external low to our external high, right, with areas of imbalance from an introduction of demand after we had this daily reaccumulation. Price traded higher, right, and then we were up within these areas manipulating highs, leaving those lows that we can see right here after we manipulated those highs. Then we broke structure to the downside with displacement. Where was that candle before that candle? Within right here, right? We had our first structure break here, second structure break here, area of supply that had occurred right here. As price came into those areas and traded into those areas, right, again, we were moving higher into those areas, manipulating those highs. So we tapped into that area of supply. What are we looking for next, right? That footprint, that algorithmic introduction on the hourly time frame to show me that price wants to move to the downside after we tap into this area of supply. So where does that occur? We'll go ahead and let this play out. Boom, that displacement candle is given. I now have an area of supply to look to possibly take this to the downside. Where's our 15-minute candle before candle that broke to the downside, right? Right here. Another area of supply that I can look to take this to the downside. So let's watch what occurs next. Price starts to trade higher up into our area of supply. We're looking for the raid of the early shorts, right? That buy side liquidity. So let's take out the early shorts. Let's get some longs into trades so people are thinking that this is going to now move to the upside. Maybe they're looking at this as dumb smart money. They say raid to the downside, break a structure. Let's take this to the upside. All right, we start to trade higher into our area of supply. And then once we tap that area of supply, now on lower time frames, our structure break occurs, right? Our 5-minute structure break to the downside. Where's your candle before that candle, right? Right here. Let's go to the 1 minute now. So watch price delivery as we tap into those areas of supply. We tap into this area of supply here. This placement candle is given, right? That candle before the candle that broke structure to the downside here. We tap into that area of supply. We're looking for the continuation downside at this point. So this is where we would enter the trade. Let's look at this time and price as well. 8:30 price that had hit. Right, that push to the upside. Once that price tag had opened up over here, right? Push to the upside here. What do we see here? Push to the upside here. So opposite of our structural narrative, again, that we were talking about with the first algorithmic delivery of price and time, right? We talked about how we wanted to see it opposite of our narrative. We wanted to see it push up, right? Push up to the upside here, push to the upside here into our areas of supply from our higher time frame premium, right? Taking out the highs, leaving the lows. Everything is starting to show in place. We broke our hourly, 15-minute, 5-minute, 1 minute now, so we can look for that trade. Stops over the high of the supply zone. Right, then targeting that overall weak low narrative of our range. We tap into that area of supply, and then we get the drop, right? And you get your first drop completely off now that we have done all of that work up until that point. You get more breaks of structures, more supply that is being created, and now you can hold for that higher time frame narrative, right, 2 areas lower into demand. But it's that same, again, same repetitive theory, right? Same repetitive algorithmic delivery of price, same repetitive time that we were looking at this, same repetitive time that it hit, right? For that New York kill zone and as far as that is delivered. But again, right, nothing new to it. We're trading into premium, manipulating highs, breaking structure to the downside, showing supply, breaking structure to the downside from time frame to time frame. Everything comes within harmony, right? And I'm now able to enter the trade and then hold it for a longer structural narrative. So with that being said, that was USDJPY. We talked about GJ. We're going to go into some XAU, and then we'll talk about some silver as well. I kind of want to clear this chart, so that's what I'm going to go ahead and do. We'll look at what we're looking at for XAU, and then I believe yes, we can clear this one as well. But I actually like the TA I have on this, so we'll just keep that for now. But understanding XAU, we talked about that delivery into that supply zone, right? And then the push away from that after we had shown that manipulation of highs, the distribution into that area of supply. Right, rated the highs, pushed up higher, left all the lows, and then after we rated the highs, broke structure internally, we saw the move lower into these areas of demand.
Weekends. Strong hands.
What you got going on, composite operator? Nothing? Alright. So now, right, if we're looking at this from this perspective, right, from this institutional perspective, after we traded up into this area of supply that we were looking at before, we saw our break of structure, right? We have equal lows that were created right here, rated, and then price moved higher, an area of imbalance from this break of structure out of this range, so we could see price react to these areas of demand at 1724 if we were to continuously create those, or create that buy side liquidity, come into these areas lower, manipulate lows, right, and then break structure upside. After that occurs, we now have an area of demand to look for price to move into and then take this higher overall. But obviously, our delivery of price is going to be to these weak lows and higher time frame weak lows that we can see, as well as structural liquidity on the weekly time frame into this area of demand lower at 1631 if we continuously follow that narrative. XAU has been in a range. It's been actually pretty annoying coming down, stair stepping right into these areas, but that is good as far as a possible bullish narrative. The reasoning for that is the creation of that buy side liquidity as we come into these areas. And then we'll talk about XAG, silver, very, very similar. I do like the higher time frame chart overall as far as silver goes. We traded up into this area of supply and we are taking all the highs, right? Mitigating all of this supply as we are moving lower into demand from our first break of structure on higher time frames. This is a monthly chart. We saw this push to the downside here, right? So this is my quote unquote order block. This is my institutional candle, right? This is my area that algorithms push price down so then they could enter positions to take to the upside, right? So this is where they entered the market and push price to the upside. So I want to see price come down into this area of imbalance as well as mitigate this institutional candle at 16,663. Once that occurs, I'll look for higher prices for silver overall. So once this occurs, I'm about to go buy a bunch of jewelry, right? Bunch of silver bars. Do what you got to do to acquire your silver, right? But I do like the silver chart as far as this goes. If our lower time frames are still showing that structural delivery of price into this monthly imbalance as well as institutional candle, then I'll look to take this higher overall. But I do like how XAG is setting up overall on the monthly chart. Obviously, this is a higher time frame chart. But we are looking at a possible right reversal to then take it into those areas lower. So we saw a daily break of structure to the downside right here, right? That candle before that candle, creation of supply within this area right here. If price can trade back up into this area, right, maybe mitigate this institutional candle here, mitigate this area of supply, absorb that, then break structure on the 4-hour time frame. I'll look to take this lower into that imbalance, right, that monthly imbalance. And then once that occurs, if we receive, again, manipulation of lows as we are coming into these areas, and then that break a structure, institutional footprint, we can look for then demand and take this higher overall. But again, right, it's literally the same exact thing, looking for the same exact thing. It's not, keep it super simple, right? It's not very difficult once we can create it and make it repetitive for ourselves. Understanding where algorithms are entering positions, looking for that footprint, waiting for that displacement, right? Said this last stream, I said this stream before that, but waiting for that wave, right, to come into play. If you're surfing the charts, where's the wave in that form of that displacement, right? Where is that wave? If the wave is not present, you simply cannot surf, right? If that's not showing up on the charts, then you simply cannot surf. Um, so we'll talk about now when and when not to be present, right? Because I say, oh, just wait for this, right? Wait for the wave to come into play. But how do we know exactly when that wave is going to occur, right? So we talked about our time as far as volatility coming into the market, right? Certain session times when we can look for session time openings for volatility to come into the market, and when we can look for certain news, right, to come into play for news-driven assets or just news-driven assets in general, right? Looking to enter something after news occurs. But when do we not want to be in the market, right? As far as Forex goes, not a lot of people have. I'm not sure if a lot of people have mentioned this, but there is a spread hour, right, from your 5 to 6 p.m. Eastern. For those that do not know who are trading Forex, liquidity is being moved between the brokers during that time, and spreads are super high, and most of the time it's actually even closed for most brokers that you actually can't open positions at all. So definitely not something that you want to enter when coming into the market around 5 p.m. Eastern. Don't want to enter around then, get caught in spread hour. You might have a gap up or a gap down through your stop loss, not something that you want at all. As far as that goes, but understanding that that goes hand in hand with session times and with when volatility is in the market is very important, because if I'm not going to be in a trade because of spread hour, right? Because the liquidity is not available within the market, meaning that price is not going to move, right? Um, then why would I try to enter any positions if price isn't going to go anywhere, or isn't showing some type of push, or isn't going to show some type of narrative, right? If it's basically gambling at that point in time, right? I'm just saying long or short. Hopefully, when it opens up, it goes my way, right? That's not what we want as far as when we are looking to get into trades. We have to wait for that displacement to come into play after our structural narrative has formed, and then we have our area of liquidity with a structural narrative to look to take this or to look to take our trades to, right? So when and when not to be present is literally as far as that displacement goes, right? As far as what type of trader you are, as far as a scalper, intraday swing, right? Whatever you are looking to trade for swings, right? Waiting for every single narrative to come into play, waiting for the daily to then the 15-minute or even to the 1 hour, right? To come into play, waiting for all time frames to be into harmony to then enter your swing to hold for the higher time frames, right? If you are intraday, waiting for the volatility to come into the market at that point in time, right? And then finding your structural narrative and taking the trade as far as it goes. If you're trying to scalp, right? Again, waiting for your structural narrative and then taking it to relative take profits on lower time frames, right? Versus trying to take it to a higher time frame take profit that is just completely unfeasible. It's the same idea, same belief, right? But we want to wait until that volatility comes into the market, until there's volume, until there's reason for price to deliver to certain areas. But as far as that goes, I mean, that's literally just as simple as it is when we are trying to look into enter any trades at all. It's just waiting for that structural narrative to show from that displacement, right? The algorithmic introduction, that footprint, that digital footprint. And then once that is there, we'll look for the confirmation of that, right? In the form of Wyckoff, in the form of structure and supply and demand. And then once that is given, right, we can look to enter our trades and then look to take it to where that algorithmic price delivery wants as well. But very, very, very simple, right? Keep it as simple as possible. It is 1, 2, 3 things I'm looking for every single time, right? That impulsive move with displacement. We're looking for the confirmation of that, right, in the form of Wyckoff. And then we can look for the introduction, and then we can take price wherever it is, as far as to the downside, right, or to the upside. But with that being said, we did gold, we did silver, we did GJ, we did USD JPY, we did ETH, we did Bitcoin. We'll go over some Dow as well. Talk about this trade that came into fruition right here, why I wanted to take it into this area of supply, why I ended up getting stopped at break even after this liquidity was rated here, but our zone that we have here as well. So understanding our weekly time frame, we started to move higher, right, up into this area of supply that had that was introduced from our first break of structure to the downside overall right here. We saw price rate highs, right? Break structure once, break structure to the downside right here, introduce supply within these areas here. So if I'm looking at price, right, as we are trading up into these areas, again, same with Bitcoin, same with ETH, where were those early shorts present, right? From this high to this low right here. Let's go ahead and draw this out. Just our range for a premium discount so we can understand. Right, as price is trading into premium, we are leaving lows, right, starting to manipulate highs, leaving those clean lows, leaving those lows behind, right. We trade up into this area of fair value, this area of imbalance, and these equal highs that are present, right, are rated to the upside right here. Once that buy side liquidity is opened within the market, once those early shorts are taken out within the market, right, we see the break a structure to the downside, price trades up into that supply candle, and then moves lower overall into areas of discount on our lower time frame range that we had in place right here. So let's go ahead now, understand our disapproval theory, as well as understand where this trade was entered, why it was entered, right? So as we were moving higher within this range right here, at this point in time, right, we have a full breakout of our internal range that we have in play right here. So from this high to this low right here, we have a full breakout on this breaker structure to the upside right here. We were looking for the introduction of demand to then take it to that liquidity objective, right here. And then if price were to create a higher low, continue higher, right, then I was still going to be able to hold that trade up into those areas. But at this point in time, right, this was my most feasible take profit. So looking at what happened, right, at this point in time, again, we're looking for the raid in the introduction. So we saw price break structure to the upside right here, and then we saw price break structure to the upside twice right here. So we have our area of introduction, right, our W that we talk about, that came into play, and then we saw the early longs that were created as well. Price traded higher, broke structure once, broke structure twice, moved lower into those areas of demand, right? Rated those lows, so we opened up the liquidity within the market, took out the late longs that were in these trades right here, and then once that occurred, we moved higher, started to move lower, made an internal high and a low, and then we broke structure to the upside once here, broke it twice here. I have an area of demand to look to enter, right? And then once that is given, I'm taking it to now my structural narrative, my area of liquidity, right, from those equal highs that we had right here. How are algorithms making money, right? How are hedge funds making money in the market? How do you make money in the market? You take it, right? If that's is completely honest as it is, right? You take money. You don't make money in this market. So understanding that we are taking money, right? We are taking the form of equal highs. We are taking retail stop losses in the form of equal highs, right? With the algorithms is when we can start to understand liquidity objectives as far as take profits go, right? So I talk about liquidity a lot as far as the introduction and as far as take profits, but that is as far, or that is as simple and as basic as it is, right? I'm looking for it for the introduction, and I'm looking for it for a structural liquidity take profit over and over again. I do believe on its own, when I talk about liquidity, can be very, very confusing because we have a lot of times where liquidity is rated, right? And people think automatic reversal. But then that liquidity is rated, and then we get a continuation, right, to the downside or whatever it is, if it's going upside or downside. And people get very confused in those situations. So we need to pair it with other confluences, if it's structure, right, supply and demand, Wyckoff, whatever it is, however you decide to trade and decide to view these markets, right? We need to pair that with other confluences to then understand where price is going to deliver to next. But that's as simple as it is. As far as that goes, right? As far as this trade goes, as far as the same exact structural narrative, break a structure to the upside, introduction of demand after liquidation rate to the downside. Our structural narrative is still bullish, so I'm still looking for upside, right? First take profit would have been at this week high right here. After that was given, right? Then we have our area of liquidity. It really depends on how you want to trade as someone who wants to make this a job, right? As somebody who wants to sit down and make this a job. Do you want to swing? Do you want to scalp? Or do you want to intraday trade? Ask these questions to yourself. Write this stuff down to yourself. Go to your notes. Write down your goals, what you want with trading, how you want to achieve that, and then sit there and say, okay, how is this going to work around my life, right? What hobbies do I have? Do I have to go do certain things during the day? Do I not sleep during the night? Whatever it is, right? However you are as a person, you need to make this work for you. Because if it does not work for you, then at the end of the day, you will not be profitable, right? If you cannot manage risk, at the end of the day, it doesn't matter what strategy you have, right? It doesn't matter if it's 100% win rate and 10 R&R every single time. If you cannot manage risk and you cannot manage emotions, right, then you will lose in this game. It's the same exact feeling, right, when you are approaching the charts. If you cannot manage that ability to look for the same thing over and over again and to take away that FOMO from not waiting for displacement to come into the market, trying to catch a top or trying to catch a bottom, right? Then that's when you get burned and that's when you get humbled. And then what happens when you go look back, right? And let's say you entered a short or something right here, right? Let's say you entered a short right here when we came into this area of supply right before this liquidity, and then you were stopped out, and then you say, "Oh well, it was so wrong, right? My trading, however I'm looking at the charts, whatever it is, SMC doesn't work, whatever you're saying, right? just blaming the strategy. Um, and then you go look back and it just falls to impatience, or it just falls to FOMO, right? It just falls to FUD, right? Fear under distress. It just falls to the most simple things that we don't look for and don't understand when it comes to trading. Trading is literally 80 to 90% psychological and 10 to 20% technical. That's it. Anyone, I do really believe that anyone can learn the technicals if they apply the time to it. Um, but as far as the psychological aspect of it goes, not anyone can, right? And that's why 90% fail. And that's why hedge funds are super successful, or sorry, prop firms are super successful because they capitalize on the 90% that fail, right? It's the same type of feeling, the same type of everything, right? Same type of scenario I'm looking for every single time when I come into the charts. Make it the same, make it boring, and make it a job, because once it is a job, then it will start to pay you like one, right? Once you go into the charts every single day, get your look at your trade, right? Get your take profit to stop loss, and then let's say you booked 3% on that day, and you didn't even think about it. You didn't even think about that 3%, right? That you just made. You just set your take profit, set your stop loss, walked away. Your take profit was hit, and you made 3%. You do that every single day, right? You just made 15 to or 7, right? Let's do 7, sometimes 3. You made 21% in a week. That's dumb, right? That's dumb money at that point in time. And now that 2.5% a month week, or sorry, 2.5% a week goal, right, has been destroyed within a week. And now you can sit there and take a break from the charts, because if you are sitting there and making all of that, right, within a week or even within a day, however quickly you made it, you need to understand when to discipline yourself on that end as well, right? Because we can get into areas where we overtrade. We just hit 5, 10 in a row, right? You're feeling super, super confident, super good about yourself, but we need to understand the job, right? This will still blow up if you do not treat it as an employer job, right? If you decide to keep trading and then you decide to throw in more because now you're super confident, right? And then you lose a bunch of money. Now you just lost half your portfolio, right? You didn't discipline yourself and do the same thing every single time. We need to discipline ourselves, make our plan, set our structural narrative, and do the same thing every single time when coming into these charts. These sessions and these live streams are going to be very, 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 very repetitive and probably very boring as well, right? And then because at the end of the day, that's all it is. Everything that has been shown, right, and everything that we've gone through within all of our past live streams. Obviously, we're going to be showing the introduction to SMC, right, and going through supply and demand, going through these technical terms as far as institutional concepts go throughout the Sunday streams, right? But with these streams, and when we're looking at new plays for the week and looking at past plays that have happened, looking at replay modes that have happened, it's going to be the same thing over and over again. It's going to be very, very, very repetitive, because that's all it is. There's nothing more to it. There's nothing less to it. If we manage risk, right, and we decide, again, I'm going to say this for the thousandth time, right, to follow our steps over and over and over again, then we can make this a job and we can make this very successful. But as far as questions go or anything like that, is there any charts or anything like that that someone wanted me to take a look at before we ended up heading out? Right here, you can at me in crypto chat, stream chat, wherever it is. Or decide to unmute your mic. If you can't unmute your mic, at me as well. But I'll give about a minute to 2 minutes for people to ask questions, and then I'll go ahead and end this stream right here. This was recorded. It will go onto the YouTube after this is done. Let me go ahead and check this stream chat real quick. Yeah, I can take a look at Solana. I've been taking a look at this one in a while, but we'll take a look at her, see what's going on. I think I had the USDT. I'll just add one. Once this comes up, just put it on this one. All right, we can do a daily to lower time frame one for this one as well. For Sol, okay, this one's really interesting. So on our higher time frames, let's look at the monthly chart first. Okay, so we had this first push up here, and balance was created on this move right here. We have some higher time frame demand within these areas down here at $4, and balance was created on this move. This was our impulsive candle that broke structure. We have liquidity that is being built up right here as well. That sell side liquidity that we can see is present. On our weekly time frame, we came down, created a low, created a higher high, higher low, higher high, higher low, higher high, and then a displacement candle to the downside. So it does look like we created actually some weekly supply within this candle right here. If I go now to the daily time frame, you see that break to the downside right here, displacement candle right here. So we could probably refine this to something like this. If price can trade back up into this weekly supply, we could see that delivery into then that monthly liquidity and possibly that monthly demand or areas right here actually from this reaccumulation down at $15-16. We can take out those lows after coming up into these areas right here, but this is just a daily chart. Obviously we're going to go to lower time frames now. I do see more supply than I do demand. We could be possibly mitigating this institutional candle here that brought us out of the range to move higher up into this area of supply. As far as the structural narrative goes, delete this, bring this over here. We've created a lower high, lower low, lower high, a possible reversal in play. I would just want to see either this high that created this internal low broken to the downside, or this high at $37 broken before I look to take this upside. Otherwise, I would look for the continuation to the downside, right? Mitigating these areas of supply, then breaking structure with displacement. Then we'll look to take it to one, this weak low that is created right here, and then overall your next available area of liquidity from the introduction of demand. So I would take it to these lows right here at $30.99. But yeah, that's pretty much all I have as far as SOL goes. I really don't, if I'm going to be completely honest, no problem, no problem. But if I'm going to be completely honest, my personal opinion with altcoins right now, I'm just really not finding the joy in trading them. I really only like Bitcoin and ETH as far as if I were to trade it, but there's really just not a lot of money, a lot of liquidity in the markets right now for cryptocurrency. Within indices and within Forex, we are seeing a lot more liquidity every single day, traded every single day. So I am liking that side a lot more, and that's why I'm showing a lot more Forex charts, a lot more indices charts, and only Bitcoin and ETH, as those are the mains, and those are going to hold the most money for cryptocurrency. But yeah, with that being said, again, I appreciate everybody who had popped out and listened, sat here, listened through all of this, got the repetitive stuff down, right? Listened to me ramble about being repetitive, listen to me ramble about the same things over and over again, right? I appreciate you guys sitting here listening to this, getting better. And with that being said, I do believe that is all the questions that I've answered. If there are any more, you guys can always hit me in DMs. Feel free to at me in chat. But I hope you guys have a great rest of your day and or night, and I will look to catch you guys later. These plays will be posted as they come into fruition as well within either lessons or FX trades as they come. But thanks again, and I'll catch you guys later. Peace, peace.